Closing journal entries from chapter 4. First, you need temporary accounts, and we'll have permanent accounts. Now, temporary accounts include all the revenues, all the expenses, and we want to include dividends here, and a new account, income summary. Now, these are all temporary accounts, and our permanent accounts will be our assets, our liabilities, and our stockholders' equity accounts, such as common stock and retained earnings. Now, when you close out accounts, only close temporary accounts. Okay, now the question is, how do I do that? So how? Basically, you will go to the respective T accounts. So go to the revenue account and whatever balance you have. That's normal balance. It'll be on the credit side. And you will close that out to the income summary account, which is also a temporary account. So this amount right here will be closed out to the income summary, and it'll make the balance in revenues 0. So we're going to set up our journal. We'll have date, then the account name, and then we'll have our debits and our credits. And then I'll have my T accounts. Now what I'd like you to do is to pause your this video and get the worksheets that we worked on for chapter 4, the practice worksheet you were supposed to do on the website. So I'll go ahead and wait until you get that. So pause until you have that. Okay, you should have your completed worksheet. So your temporary accounts would be your service revenue account, your wages and salaries expense account, your insurance expense account, your supplies expense account, and your depreciation expense account, and then your interest expense account. Now the first account you're going to close out, you're going to use the ending date, the end of the period after you prepare the financial statements. You're going to debit service revenue for the full balance of the account, that's 24. And then you are going to credit income summary account for the 24. And then when you post it, you're going to post 24 on credit side for income summary and debit side for service revenue. Then you're going to close out the expense account. Now, expense accounts are going to be closed out to the income summary as well, but you will debit income summary. And what I'm going to do is a compounded journal entry. Instead of doing 5 separate simple entries, I'm going to go ahead and include all of the expense accounts. So the wages and expense, wages, salaries, and expense account will be credited for the 12. And then the insurance expense will be credited for the 2. And then supplies expense will be credited for the 1. And depreciation expense will be credited for the 3, and then we'll have interest expense credited for the 1. 1 plus 3 plus 1 plus 2 plus 12. Add that together, you get 19. So you have a 19 debit to income summary, and then you have the 12, 2, 1, and 3, 1 to the individual expense accounts. So when you post that, that will take a debit to income summary. Then you'll have a 12 to your wages and salaries expense, 2 to the insurance expense, 1 to the supplies expense, 3 to the depreciation expense, and 1 credit to the interest expense. Now all those accounts are going to be 0 balances. And even our service revenue was 0 as well. And then the balance and income summary will now be 5 on the credit side. Then, since we have a balance of 5 in our income summary, that is a temporary account as well. So we want to close that out. So we are going to debit income summary for 5, and we will credit retained earnings. So we are closing to the retained earnings account. So 5 debit to income summary, 5 credit to retained earnings. So when we post that, oh, I forgot the beginning balance. What was the beginning balance of retained earnings? It was also 5. So the beginning balance of retained earnings per our worksheet was 5. We are crediting another 5 to it. We have a 0 balance in our income summary. And then our final temporary account we want to close out is our dividends. And currently, let's see, there was a balance in that one as well. So there was a $1 debit. So we're going to go ahead and close that out. We're going to debit the retained earnings account because we close out our dividends directly to the retained earnings account. So that'll be a 1 debit, and then we'll credit dividends for the 1. And when we post it, that'll cause our dividends to be 0, 1 on the retained earnings, and that'll bring it to a $9 credit balance. And that $9, it will agree to the ending retained earnings balance per the retained earnings statement. And then we're done. We've closed out all the temporary accounts. Any questions? Post in Blackboard.